I have a question on just going back to your lockdown period. So when I entertain an offer from a buyer,
Yeah.
I ask them for a Goodwill deposit, but I don't deposit that into escrow because I don't want to incur fees for the buyer, while he's doing or they're doing their due diligence. They're still looking at tax returns, they're talking to their accountant, they're talking to their attorney. And so, I mean, and then of course, that deposit goes towards the purchase price. But if he decides, okay, this isn't a deal for me, I mean, then I've incurred escrow fees, right? Third party. So so
Really.
generally I just have him put a deposit down, but he takes a picture of his check, and I don't do anything with it until due diligence. At least the books and records check out. I don't know.
Yeah. Well, if you're holding a deposit check, then you have to do all kinds of stuff for the Department of Real Estate. You have to have a ledger of incoming, outgoing, and all of that. If you get audited, and it's not even you, it's your broker. So, and EXP doesn't want us handling funds at all. So if you're with EXP, then don't take a deposit check.
Oh,
Now, that being said, I can tell you what I do in my purchase agreements. Anytime there's a deposit, it just says that the buyer is going to send the funds or deposit the funds in escrow within 3 days of signing. And so I make it the responsibility of the buyer. I do open escrow. I want escrow open, but the escrow company I work with is very good. I'll send them a purchase agreement and say, open a file and give me an escrow number and do nothing else until due diligence has been signed off. And then that's what they do. So they'll give it an escrow number. They'll send a demand for the deposit to the buyer because ultimately we want to make sure that the buyer's funds are good. And so they will get those deposit funds. If the buyer decides to walk away during due diligence or because of due diligence or whatever, that's their right. And then escrow will just draw up a cancellation. They really don't have to do a cancellation at that point because they haven't drafted escrow instructions. Buyer and seller haven't signed any escrow instructions. All they have to do is draft a release of deposit that buyer and seller have to sign to get the release back or to get the deposit back to the buyer. But they don't charge anything for that. So
Yeah, but there's still like wiring fees, and they don't charge it. Your escrow company doesn't charge for receiving in funds and being insured for other people's funds.
they don't know because I do enough. I mean, they don't. They've never charged. If they have any hard costs, they might take it out of the buyer's deposit before refunding it. But I don't know.
Okay.
I just haven't had that problem before. I've been working with them for a while.
So your standard process is to take a deposit to make sure everybody honors the asset purchase offer that was written and signed off on by both buyer and seller, right?
Yeah.
Okay.
Because I mean, look, seller wants to know. That's part of seller's due diligence, right?
Uh-huh.
Sure that deposit is good, that it's in, and that the funds are good. I mean, you can't have your seller sign off on due diligence with a deposit that hasn't been, when the deposit hasn't even been made yet. So
Right. Okay.
yeah.
thank you, Tanya, sharing that process, because recently I have exactly the same happen, because during the due diligence, the buyer doesn't want, and his check is bounced. Even yeah, so that's, I like your idea. We deposit the check is clear during the due diligence. If the buyer decide he doesn't want to move on, the escrow will return the check rather than the check was bound. Oh my goodness. Yeah, I learned the lesson. Thank you, Tanya. Yeah.
Yeah, and at that point, your seller can get very upset too.
Yes, he very upset.
So yeah.
Now, didn't you just say that with EXP they don't want us taking deposits though? So you use an outside escrow?
Well, so I'm in California,
Hmm.
and in California we use third-party escrows. We don't use closing attorneys.
Oh,
So,
okay.
So we will have a purchase agreement, and in the purchase agreement, there's a good faith deposit, and there's, we can indicate what happens with that, and I always indicate that the buyer will deposit, or will make that deposit directly to escrow within 3 days of
Mhm.
sign. So,
Okay.
or within
And what
7
about
days.
what about having escrow instructions that give them a certain amount of time that's free, and then their deposit goes hard after a certain time? Is that a thing?
I mean, you can, that wouldn't be an escrow instruction per se, unless it's part of your purchase agreement, but you could certainly add an amendment to the purchase agreement, just saying that a portion of the deposit or all of the deposit will go hard at a certain point. I think it depends on the contingencies. If you have a cash deal, you can do that. If you have a deal where there's an SBA lender involved and there's a lease involved and there are other things that could potentially that are dependent on other parties other than just buyer and seller. Sometimes trying to make deposits go hard can be a problem because you don't know. We had a situation one time on a transaction where the lease, it took 3 months
Oh.
for the lease to get assigned, and then it didn't get assigned. Then the lease, they wouldn't give a lease. So the business was on a month-to-month in the farmers market. All we were asking for was a 2-year lease because we knew we couldn't get any more than that. But they dilly-dallied around and jerked us around for 3 months, and then came back and said, no, we're not. Well, they said, we'll give the buyer a 2-year lease, but we want $50,000 in fees to do it. And so at that point, the buyer was just like, okay, I'm done, I'm out. And if we had had something in the contract where his deposit went hard, that would have been very unfair to him because he wasn't the
Mhm.
it was just a jerk landlord. So sometimes you run in, especially, landlords can be difficult. Lenders, again, you can have issues with lenders where maybe everything's going along just fine and you think you're about to fund, and then they have a personnel change or a change in underwriters or a change in the credit manager or something like that, and now it has to go back through the process, and so it delays things. And so that's why we see hard deposits. And I mean, you see hard deposits a lot more in commercial lending than you do in business brokerage.
Is the time it takes to get a loan typically why buyers ask for such long due diligence time?
No. I mean, the financing contingency is a separate contingency, typically. So most of your transactions in a business, you're gonna have a due diligence contingency, you'll have a financing and a lease contingency. And then if it's a franchise, you'll have a franchisor approval contingency, and then, there might be other things. Due diligence, it depends on the sophistication of the buyer, the type of business, whether they have an accountant involved, an attorney involved, if their accountant's on vacation, if they're, or their attorney's on vacation, and what the availability is going to be. So due diligence could go a little bit longer simply because, they know because the buyer does have an accountant and an attorney and wants to give them sufficient time to help them. And accountants and attorneys aren't just sitting there twiddling their thumbs waiting for, this guy's paperwork to come in. So they want to make sure that they have a sufficient amount of time for their other professional advisors to do what they need to do and get back to them.
And when it takes longer, are you going to change the addendum? Are you going to create another addendum?
Yeah. I mean, I've extended due diligence before
Yes.
because an attorney was out of town, or if something came up that needed to be researched further, and it was going to take a little bit of time for the documents that have been requested to come in and whatever. So yeah, you just extend the due diligence deadline
Okay.
if the seller wants to. I mean, the seller doesn't have to.
Oh,
Seller's not required to. The seller can say no. If you either sign off as you were supposed to or terminate and walk away. So the seller can send them packing too. But if buyer and seller are working well together on a transaction, then you're better off to go ahead and extend it. And personally, I always want a buyer to know what they're buying.
yes.
So if it takes a little bit longer for them to get what they need so they know what they're buying, I always feel like that's going to keep me out of the courtroom, right? The more they know about what they're buying, the more documentation we've been able to provide, the more answers we've been able to give them, that every time that reduces the risk that we're going to end up in the courtroom.
But at least you're gonna ask the buyer how long you want to extend, right? You're gonna ask them
Yeah.
to.
Yeah, sure.